zero loss option trades. So remember, before you ever enter any options trade, please make sure you know how to close it. I'll pin a video in the comments section below where I show you guys how to close out of any options trade. And I'm just going to get straight into this video here, guys. So I am going to go over to ticker symbol HAL. Okay, so HAL. Let's go over here to the stock. The stock currently at $27.62. So what I'm going to do is I'm going to implement a neutral to slightly bearish strategy on this stock. But remember, before you actually go into the options and set up an options trade, there's two things you should always check. First thing is commission fees, because we are going to be opening and closing multiple contracts here with this particular strategy, depending on what broker you're using. That may be high commission fees there that might eat away at a lot of your profit. Now, Robinhood doesn't have any commission fees, so we don't have to worry about it on here. Second thing we want to check if the stock has a dividend. Why? Because we're going to be selling options. Anytime you sell options, there is risk of assignment. We want to avoid being early assigned due to the ex-dividend of a stock, right? So you should check, does the stock have a dividend? If we take a look here, it looks like this does have a dividend. So we need to check when the ex-dividend date is. We don't want to sell options expiring on the week of the ex-dividend. If we do, we want to close out 2 days before. And again, because we don't want to be early assigned due to the dividend. So what we can do is we can go to NASDAQ.com, for example. We can search up the stock we're using, so HAL. And then we'll go over here to HAL right here. And then on the left, we can go to Dividend History. And this will tell us everything we need to know about the dividend for this particular stock. So if we take a look here, dividend yield 0.63%. Ex-dividend date was December 8th, right? And so if we take a look at the history, the next ex-dividend date will be around March. So we don't have to worry about the ex-dividend for the next couple of months here. So once you've checked all that, then you can go back to your stock and actually go into the options for the stock. So I'm going to go into the options now for HAL here. First thing I'm going to do is I'm going to choose an expiration date. I'm actually just going to leave mine as it is right now, which is January 28th. That's the closest expiration date to us. Now, after you've chosen your expiration date, for this particular strategy, what you want to do is you want to determine what price you believe this stock will be at on expiration date. So on the expiration, which is January 28th, what price do I believe HAL will be at? Let's say I think it's going to be at around $25, right? So slightly bearish on this stock. Let's say I think it's going to be at $25 on the expiration. So I'm going to start there, and I'm going to start by selling. So I'm going to go to sell 2 calls that have that strike, right? The $25 strike. So I'm going to scroll down and I'm going to go to the $25 strike. So I'm going to end up selling 2 of these, 2 calls right here. And I'll show you guys how to modify so that you can change the quantity of each contract that you want. But I'm going to go ahead and click on here. So for selling this call, I'm going to get about $332 or so, okay? And again, I'm going to do 2 of these. So I'm going to get twice as much premium, right? Credit. And now, after I've done that, what I'm going to do, I'm going to switch back to buy now. And I want to buy 1 call above and 1 call below. So I'm going to buy 1 call that's above the calls that I'm selling. So right here. And I want to buy 1 call that's below the calls that I'm selling. So right here. Right, so these calls that you buy need to have the same distance from the calls that you're selling, right? So this is 0.5 away, this is 0.5 away. Now what I can do is I can come up here to this drop down, click on it, click on custom, and this lets me change the quantity of each contract. So remember, for the calls that we're selling, we actually want 2, not 1. So we're gonna do that right here. So ultimately, if you guys remember, this is the long call butterfly spread. Generally, right, this is implemented for a debit. But take a look here, right? This is telling me that I'm going to receive a credit, right? It says we're getting a credit, it says we're getting $79 instead. Instead of paying for this, we're actually going to get paid $79 instead. And so since we're getting a credit, This is basically telling us that there is no max loss, that there is no risk, right? If I scroll down, we take a look at the max loss part here. As you can see, it's blank, right? It's telling us that there is no risk here. All right. And Robinhood's not the only place that's going to tell me this, right? If I go, for example, to option strat, if I go to option strat and I go to build and I go to long call butterfly spread here. So here's the, let's see, where is it? Right here, long call butterfly. If I go here and I set up this exact same trade, so if I, choose HAL again, I choose the January 28th expiration. I sell 2 calls at the $25 strike, which is right here. And then I buy a call right above that, so $25.50. Buy a call right below that, $24.50. This is going to tell me the same thing, right, on option strat. Getting a credit, although long call butterfly should be implemented for a debit. This is telling me I'm going to get a credit, meaning that my minimum profit is $79. I'm leaving with at least $79 here. Max profit $129, right? There is no risk involved. That's what this is telling me, similarly to what Robinhood is telling me. So what is going on here? Is this a no risk options play? And this is the most common question I get every single day, right? Every single day, at least one person will send me something like this, asking me what's going on. Can I enter this? Is there really no risk involved? Did I just find, something that'll make me rich or something like that? Well, what is going on here? Well, first, we need to take a look at the bid-ask spread, right? So first of all, if I continue here, right, we can see what the bid-ask on this is. So generally, right, on Robinhood, the limit price is set generally to the midpoint of the bid-ask. Here is not even set to the midpoint because the bid-ask is 0 to 296. The middle of those two is 148. So generally, actually, Robinhood would set this at 148, but they didn't here, right? And so if it was 148, if it was in between these two, this would actually tell me I'm getting a credit of $148, right? Now remember, the way this works is the bid is the highest price a buyer is willing to pay for an asset. The ask is the lowest price the seller is willing to accept. And again, usually they'll meet at the middle, right? If we take a look here, we have 0, right? Basically, nobody wants to buy this here, right? So generally speaking, even if you, went ahead and placed this, there's really no one buying or selling this right now. And so it'd be hard to actually get in. Secondly, okay, more importantly here, Robinhood knows that this strategy should be implemented for a debit. And so if I even try to place this trade for a credit, I'm going to get a warning message, right? If I go to review order here, it's going to ask me, are you expecting to receive a credit or pay a debit? If I do credit here, right, if I leave it as credit and I try to submit, what's it going to tell me? It's going to say error. Order premium must be less than collateral. So even if you come across something like this and you try to place it, Robinhood is smart enough to know this isn't right. Okay, something's not right here. We're not going to let you place this. And as you can see, you're going to get an error message that says order premium must be less than collateral. Okay, so you're going to get this warning message. Now let's say Robinhood could let me place this trade. So let's say Robinhood didn't understand this and they would, they did allow me to place this trade. Here's the thing, okay? Here's probably the most important thing. No market maker is going to accept or enter this trade. Why? Because they would be locking in a loss, right? You need to understand that somebody has to be on the other side of this trade. And they aren't going to enter something that guarantees them a loss, right? Because if I go ahead and set this back up here, right, basically what this is telling me going through this is that, there's no risk here, that I can enter this and basically I'm guaranteed a profit, right? The thing is that there's got to be someone else on the opposite side of this trade. For them, it's going to basically say guaranteed loss, right? In fact, we can actually set that up here very quickly. We would basically do the opposite, right? So it would actually be selling a call here, and then selling a call here, and then buying 2 calls here, right? So let's go ahead and take a look here. So this would actually look like this, right? What is this one telling me? This is telling me expected profit and loss is $79. My max loss is $129. This is showing me that I'm guaranteed to lose. This is the other person on the side of that trade. And no one's going to want to enter this. No one's going to want to get into a trade that guarantees them a loss. Okay, so I wanted to make this video because, again, I get asked this question every single day. When you come across something like this, like I just explained, there's various different reasons why you would never be able to get into this trade, why this trade wouldn't make sense, basically why there is no such thing as free money, right? You're not going to find a trade on Robinhood here that you can enter and guarantee you a profit without any risk. Okay, so anyways, I wanted to talk about this today again because I do get asked this every single day. Hopefully this helps clear it out for some of you, or if you guys ever encounter something that looks like this, just understand that it's just not going to work. Basically what you need to do is either just wait for the market to open up again. And usually, the bid ask will adjust, the price of the options will adjust, and, it'll probably make more sense after then. Or, just stay away from it, find a stock with higher liquidity, with more volume, more input interest, things like that. So anyways, if you have any questions about anything I just talked about, feel free to leave them in the comments section below. Check out the Discord, link to it in the description below. Hope you enjoyed the video. Let me know what you guys think. I will see you guys next time.